Many people just forget it because beyond $60,000 investment in US will charge one money mistake you would undo if you could.
I would have started buying Indian art way earlier.
See, I have a different investing style for US versus India.
Like, MF Hussein's older pieces, which are in the 1960s, are way more valuable than like a 2000 or late Hussein piece.
And investment, you think it's most overrated that somebody has bought?
I think, definitely right now, fixed deposits, FCNR, everyone's doing it because everyone is doing it.
I made a sculpture, a pottery, which if I can sell this at $2 million to India.
I think when you're sending funds out of India is when you're sort of stuck in a $250,000 limit as an Indian.
One thing you think every NRI is getting wrong right now. Do you think art is a good way to also repatriate funds from India? Every NRI lives with a quiet contradiction. Your income is in one country, your heart is another, and your money is caught somewhere in between. This is Borderless. I'm Nikhil. Every episode I sit down with one NRI. We dig into what's actually going on with their money and we walk it through together on camera, because if it's their problem, chances are it's thousands others' problem too. This conversation is supported by Aspora, and they make sending money home genuinely simple for NRIs. You know the usual drill. The rate quietly shifts on you and fee shows up somewhere you didn't actually expect. Aspora doesn't do any of that. You get the same rate that you see on Google, one upfront fee, no hidden markups. Remittance is just the entry point for them. Aspora is pivoting into multiple other financial products for NRIs, with gold and NRI banking being the next products. Over 10 lakh NRIs are already using it, and they are soon expanding beyond the UK, UAE, and the US. Thank you to them for backing conversation like this one. And if you also want to be part of this conversation, there's a link form in the description. Tell me your story and my team will get in touch with you. Welcome to Borderless, Niharika, from Mumbai to London to now settle in Dubai with one of the most fascinating jobs out there, art curation and valuation. Really excited to have this conversation with you.
Hi everyone, I'm Niharika Kapoor. I'm an art advisor. I'm based in Dubai, and I'm thankful to Nikhil for taking out the time today and looking forward to our conversation.
So, Mumbai to London to Dubai now. Can you please give us a broad understanding of where did you start from? How did this kind of journey take place, and how did you get to where you are today?
Yeah, so I grew up in Mumbai and went to school, high school, college there, and I was sort of always drawn to museums, art, history, culture. Growing up, even on holidays, I would drag everyone to sort of the museum for hours. And so when I decided to go for my masters, I got into King's College London to study marketing, but it had a very nice specialization. It was brand management of artists, and that's how I got an internship at Sotheby's, the auction house, and I started sort of working in the art world. It sort of opened up my whole perspective to the global art market. And then now sort of started my advisory and valuation in Dubai. I moved to Dubai about 5 years ago when I got married. So it's sort of been sort of a natural progression in life. You grow up, go to study, get married. And I think I've been very lucky and fortunate that the career sort of evolved in each sort of step as I've grown.
Got it. No, that's again not very common to also find folks in the space of art, right? And wherever you essentially where you're curating art and whatnot. So talk something a little bit more on your stint at Sotheby's and what you do today.
Yeah, so Sotheby's is the oldest auction house in the world. It was actually one of the first companies to ever be listed on the New York Stock Exchange. So it goes, way back, and it was an incredible place to, sort of learn.
And where is this entity again?
So it's based in New York. So they have obviously global offices everywhere, but the headquarters are New York and London. And it's I think it's the best place. It was a blessing. I got to learn so much. I got to see so many valuable things every single day. You're kind of surrounded by the most precious jewelry, sort of art, and like every day it's coming in, right? And then there are like really research scholars like just around you while you're learning, telling you all about the story, the history, or where we found this diamond. So, every day you're saying kind of handling museum quality things and then reading and researching about the provenance or learning about the story from where it came, kind of understanding how someone got it. And then, in London, what happens is when you die, you sort of inherit a lot of art, right? And they have to value it for government purposes and tax purposes. So people come in with their stories, and then you kind of help them decide what's valuable, what's not valuable, and sort of make those informed decisions. So I think the whole experience, it taught me like art is part of scholarship. It's part of like those relationships with people and like a lot of learning and knowledge.
Got it. And interesting, right? In terms of you'll not only you're trying to value certain art pieces again. Uh,
Yeah.
I know in the previous conversation you'd mentioned there's a science to it, etc. In terms of how you value art, but
Yeah.
one to get stories of folks who actually inherited it, how this passed on from generations and so on and so forth. But having said
Yeah.
that, being in that room, looking at this art, how do you go about with the valuation? What's the how do you actually put a value to an art, right? Because it's not listed, it's not fully tradable. So what? How do you go about doing this?
Yeah, so it's much, less about instinct than, sort of people imagine. There's a lot of research that goes about it. You kind of see the artist, and every artist sort of has a different career, so you kind of see which period of the artist this work is from. What medium is it? Like, is it a watercolor? Is it an oil on canvas? Then sort of what's the provenance?
Hmm.
That's sort of a very important word in the art world. So provenance means where the piece has come from. Has it come from a very important collector? Has it sort of come from a museum? Who sort of owned the work? Is it from the artist studio? So sort of the history of the ownership of the piece is provenance. And then you need to, most importantly today, check if it's authentic. Like, is it a real piece? Is it actually from this artist studio, this collection?
Okay.
And then often you need to see the condition of the work. Like, is there cracula on it? Are there tears? You kind of see what comparable auction results are in sort of the public market where values are sort of published. And then you see what the current demand for sort of this artist is in this period, in this medium, in this work. So it's a lot of sort of elements that come together to give you the valuations. And that's why two works by the same artist can have very different values. Like, MF Hussein's older pieces,
Got
which
it.
are in the 1960s, are way more valuable than like a 2000 or late Hussein piece, just because of all these different factors that play a role. So it's literally putting together that entire supporting evidence sort of story when valuing the piece.
Interesting. So, one thing which I kind of picked up while you were saying is that it's not just the artist or the the one who is kind of who's actually creating that art. It's also who owned it can create a premium to it.
Yes, of course. Yes, definitely. Like, the most important sort of collector
Okay.
today,
So
everyone
so
knows.
if there's a
Yeah.
well-known collector,
Yes. So that
I'm just
that's
trying
what
to
a
say if
lot of
there's a well-known
auction.
collector,
Yeah.
and because the well-known collector spotted an artist, that's elevating value.
It is. It
Okay.
is. So it's the
Okay.
estate
Great.
of that collector.
I don't know anything about art. Just to put it out there, right?
Yeah, no, so a lot of auction houses you'll see when they put
so
together a
so
sale,
so therefore,
they'll
a
say,
little.
yeah. No, they'll say it's on the estate of, so and so, and the estate. So like when I was working at Sotheby's, we valued the estate of the Duchess of Devonshire.
Got
So
it.
like everything she had in her collection, and then we sort of put it on at auction. So knowing sort of where it comes from gives it that sort of history and sort of like authenticity check and provenance. So it's that whole, thing that comes together.
Got it. Got it. So so basically you spent a good amount of time going back to your where how you grew up. You spent a good amount of time in Bombay, and then the time in London, and then now about 5 years in Dubai now.
Yeah, yeah, that's right.
Yeah. So where's home for you? What would define home for you?
Yeah, so I think, there's a famous quote that says, home is not a place, it's a feeling. And I think that's so true. Home is less about, the geography, but the people. And, India is going to always be where my roots are from, where my family is, my parents, grandparents, cousins, they all stay there. And I'm still deeply connected to it. And, I'll always go back. But sort of Dubai is now becoming a place where I'm raising a family, building a future with my husband. So, and it's close enough. So I'm kind of fortunate to have both, I think.
And close enough with enough and more Indians there, right? So
Yes, yes. And
it's a
we've sort of built
second India,
those
if I were to call
relationships.
it.
Yeah, yeah. We have a lot of friends who are like family here. So it's nice. Yeah.
Got it. Not fully unrelated, but still want to put this out there, right?
Yeah. Yeah.
Being in Dubai, there's good amount of nothing to do with Dubai, very honestly, but
Yeah.
let's still look at it this way, right? How is art in Dubai? As a do you still go back to is there good number of art collectors in Dubai and so on and so forth? That's point number one. And second, do you think art is a good way to also repatriate funds from India? Because
Uh,
there's no valuation method. As in, while you did say there's an art to it, but if anyone can peg a value, is that a way you can transfer assets?
No, so they're very strict about that actually now. When it's Dubai Customs and India Customs, everyone knows sort of who the famous artists are. There are a lot of documents that you need. You need an invoice, you need an airway bill. So everything's sort of legally documented. And luckily, because I've only worked in the auction world, sort of you're dealing with only sort of bank transfers and everything
Mhm.
very correct. So that's what I've done. It's all been sort of white. Um, Repatriating
No, no,
funds
I'm
back
not
to
talking about
India.
anything to do with bank transfers, right? See,
Yeah. You're saying like sending an artwork. So, well, as an Indian anywhere, Dubai Customs, Indian Customs all know about valuation when it comes to artwork. Sort of as Indians living outside India, you can always gift things to your parents with a proper document in place. When you're sending funds sort of to India, I don't think there's any threshold or limit. I think when you're sending funds out of India is when you're sort of stuck in a
hmm,
$250,000 limit as an Indian
correct,
and $1 million as an NRI.
correct,
So now sort of
right.
you'll be surprised, but Indian art is selling for over $1 million. So people need to sort of
Right. I'm coming from that angle, in Harika.
yeah, yeah. So
Very honestly, I'm
so
coming from that angle. Obviously, there's a follow-on question to it, right?
Yeah. So there are sort of companies. So I think when an individual sort of sends money out of India, there's a $1 million limit as an NRI sending money out. For an Indian, it's only $250,000, which is quite low. So when a lot of collectors do want to purchase sort of
Hmm.
artwork which is higher value than $250,000, they're often buying it in a company name. So as a company, then you're allowed to buy art above that amount.
Right,
So then they buy it in sort of their company names, which are registered, and they have often CAs guiding sort of the way that needs to be structured. And there are actually
right.
some people and sort of art dealers in India now who are even helping smaller sort of clients who don't have any knowledge on how to send even $50,000 out to buy a painting. So they are facilitating that. So there is sort of that requirement. I think people don't
Got it.
know how to transact in dollars, and so as long as you have a CA who's guiding you, you can put it together very easily.
Yeah. No, no, my question is a little different, right? As in, do you see a scope, right? As in, not to give ideas for anybody else, but I'm asking this point. Say tomorrow,
Yeah.
I, as Nikhil, drew something, right, as an art, or I made a sculpture, a pottery, which I got someone to value at a crazy valuation, right? Being in outside of India. Now, if I can sell this at $2 million to India through a company, I normally can't take more than a million. So can I
Yeah.
take 2 million out, right? Now, who justifies 2 million for this valuation if somebody else in India is willing to pay this?
So your bank won't allow it. Your bank will ask you for supporting evidence. And I think that's where the bank comes in. Like
Transaction
bank,
document.
no, they have compliance checks, right? So you can't just pay. I mean, like that, someone can pay for a
Okay.
sofa, someone can pay for a vase, like, and not question it. Like someone can pay for a mirror. Like, I mean, in that way, someone can say,
Yeah.
"Oh, I want this
No,
whiskey
no.
or
So,
wine
so see,
bottle."
where I'm coming
Yeah.
from, I'm saying, say, for instance, this iPad, right? This iPad, you know the value. There's a market value to it. You're pegging it, right? But for you don't peg a valuation for an art, right? And I'm purely coming from there. We can move on from there, but you understand what I'm trying to say, right? It
Yeah.
can that be
Yeah.
the means for someone to kind of pull up more assets? Obviously, it kind of falls down when if you were to sell an art to me, you're in Dubai, I'm in India. If you were to sell an art to me, do I need to pay customs?
Yes.
Are
So
you
if
aware
it's
of it?
from, yeah, yeah, if it's coming from Dubai to India, and say, suppose I'm an artist or there's an artist selling you a painting, it's sort of obviously invoiced. You pay, say,
Import of
$10,000.
art, right?
You import it, there's GST and
It's
import duty.
10%.
Yeah. So 10% GST plus customs duty plus, so there's
Okay.
CGST and S.
What's
Yeah.
the rate? Would you know? 10%.
It's 10. Approximately comes to 10, but there's also sort of import charges. So 10 to 12% of the GST, which is non-refundable if you don't have an art company, plus there's import duty on it. So when it roughly comes to about, you have to estimate
Got
20
it.
to 25%. So say suppose you're buying it for $1,000 or 100 rupees,
So see
25
that
rupees
that
will
becomes a
go.
cost. See now it
Yeah,
doesn't make sense.
it is expensive. It's very expensive. So only if you're a
Yeah.
museum can you import
Yeah.
it without paying those GST and import charges. So like a museum, registered museum can
Got
can
it.
get it in without those charges, but the museum then is not allowed to resell the work. It has to be part of the museum inventory that is open to the public to kind of
Got it.
come and
Of
see.
course, understood. And you're saying there's a good amount of Indian customers who are willing to now entering the art space and want to acquire art and so on and so forth. And
Yeah.
when you deal, you're dealing with a good number of Indians, or it's people across the world.
So I deal with Indians globally, whether they're based in New York, Singapore, or Hong Kong or India. Most of the clients I am currently handling are NRI. There are few collectors based in India, but they're buying at lower values. I think just because of all the processes in sending money out and the difficulties in that. So you did have a valid point.
Understood. No, I think if I go on asking, I think I'll have a lot of questions about your work. It's a very fascinating for me to ask, but I think the crux
Anytime.
of today's conversation is to talk about issues from an NRI perspective, not about art. So probably
Yeah.
we'll come back to topic, right? Yeah.
Anytime.
So a quick one question before we jump into or handing over the stage to you, right, for questions is that how do you look at money decisions, right, in terms of do you manage money, valuing art, etc., is anyway coming naturally to you? Is that something which helps you in managing money? I know with valuing art you're great, but when it comes to money, very what do you call, basic. You don't want to get into those aspects of things. How does it work? If you can give me some perspective.
Yeah, so I think definitely, working in art teaches you that price and value aren't always the same thing. Like some assets, because of scarcity, reputation, and long term demand, that, they grow up in price. And I think that kind of merges into investing and building wealth. If you have a sort of long term perspective, then you're sort of making the right decision, right? So I think working in art definitely teaches you about valuation and seeing, sort of value.
So if I were to call you from an investment perspective, how would you rate yourself? Beginner, pro, or expert? Where would you put yourself at?
Yeah, so I wouldn't say I'm naturally confident. I've definitely become more intentional over the last year. I ask more questions and I realize I'm
Got it.
constantly learning to build sort of a financial framework for my family. So I would definitely not be an expert when it comes to my managing money. That's why I come and talk to people like you. And I think when friends talk to me also, it's about coming to me for art advice more than money advice. So I think I'm still figuring it out and learning.
Understood. Great. No, so that kind of gives you a good perspective for everyone here, right? And where are you from? And very
Yeah.
fascinated from the kind of work that you're doing. I think it's unique for me also, right? And that's why so many questions. I didn't want to go and get into so much details about you, about your work, etc. But I didn't have an option, but it was more for me to kind of get in there,
No,
right?
happy to
That
always
being
chat
said,
with everyone.
from the let's get to the primary purpose of this conversation itself, right? As in,
Yeah,
just
yeah,
want to get your perspective of saying, or there's a reason why you've come onto this conversation, and if that's one
yeah,
thing that you want to take back home today, what would that one question be? We can get into multiple other questions, but
yeah.
what would that be? Where do you want to get started from?
Yeah, so I think, I'm at a stage where sort of career is established, professionally, I'm doing well. But I think as my husband and I are raising a young family based in Dubai, I want to make sure we're investing sort of efficiently and planning sort of globally, because we want something long term, right, for the children. And one thing that would really help, and I think, might help people in the audience as well, is sort of a framework for how sort of an NRI should plan their wealth over the next 20-30 years, like how much percentage should be in India, how much you should take out of India, what products to put it in, sort of things you're an expert at.
No, so that's where I want to kind of put a caveat out there, right? When it comes to my area of expertise or forte, I would say it's more from is tax structuring, FEMA, and there are so on and so forth, right? When it comes to investing, it's essentially I kind of share my experience as in
Yes.
personally what I'm investing. I kind of share my viewpoints, right? I'm not a certified financial
Yeah.
advisor or so on and so forth, and I don't even have clients in terms of advising
Yeah.
on financial investments,
But
right?
yeah,
But
tax
having said
angle
that, I
respect.
do have a
Yeah.
viewpoint, and that's something which I
Yeah.
can share.
Yeah. Just like as a follow up to that, like, do you sort
Sure.
of, because I currently do have, bank accounts for the kids in India, and I'm putting in smaller amounts in mutual funds for them. But as NRIs,
Mhm.
currently that's become tax free and efficient. But what's the right thing for them? Do I build wealth for them in India, which is taxable, but or do I build wealth for them outside India? Well, exactly, like doing it the way you said with FEMA in place. Like we want to do everything correctly, so that's why.
Sure. No, no, great, right? As in, from a long-term perspective, there's no right or wrong answer, right? As in, for anything to, in terms of where should your assets be, etc., boils down to few other pointers, right? Some of the
Correct.
questions would be essentially to say, have you asked yourself in terms of where do you think your rest of your life going to be, right? Are you planning to, while you've moved from India to London to Dubai, you may have other pit stops, right? You may now from Dubai you may move elsewhere. I don't know what's there,
Yeah. Correct.
in the next future. I don't know what's the path for you, right? Having said that, at some point in time you'll say, listen, I'm retiring now, right? After retiring, if it's, see, this is not an answer everybody will have it fully right now, fully sorted, right? But many will have a thought process saying, listen, I'm very clear that at some point in time I'm going back to India. right? And that way I know folks who have spoken to, who are very clear that eventually I will settle down in the US because that's where my overall circle is, or I would settle down in Dubai, in things on those lines. So few things that you need to have as a ground level assumption, right? When you start building wealth, where should it be concentrated? Is about, and what kind of assets. It all depends on these broader items, right? Otherwise, you need to keep things flexible because you don't want to get stuck into investments that is not aligning with your long term goals, right?
Correct.
Now, that being said, important questions to answer is that, or rather, bigger point in my mind is that never associate your investments to where you're staying. Right? Especially folks who are NRIs, because you don't have capital control aspects that you need to look at from an India perspective, right? People in India like me, like you said, you have the $250,000 limit that I have. I can't go beyond that every year, which would mean that I'm limited in terms of how much I can invest overseas, right? But folks like you all, it's a choice that you want to say, do I want to invest in India or not? Otherwise, I have other parts of the world that you can invest, right? That being said, where you stay, where you reside, unless there's capital control, there's no reason for you to correlate both of them, which would mean that first, my base question or the base understanding from my perspective would be, for anyone, would be to understand what is my ultimate goal, right? Okay, I have set certain benchmarks. There are enough and more things which is there out there, like your fire, fast fire, whatnot, right? I would kind of ignore all of it and say, listen, I'm at this age bracket today. I think my more productive age or life is going to be in the next 15, 20 years. This is what I want to do at that point in time, and then retire. In my mind, I don't see retirement as a retirement. It's basically saying, how do I look at a scenario where I don't do anything further for money? I do for my, this can be more in terms of keeping me active rather than earning a sort of, revenue out of it, right? If I can get there, that's fire or whatever you want to call it, right? But to get there, what is that number? Is for each it is different, right? You need to peg your current base level of living, inflation adjusted, what could that be in the future? Now that numbers changes depending on, you're in India, you're in Dubai, you're in US, you're in Singapore. It changes completely, right? Once you do all of these things, you kind of peg yourself and see what is that number that you need to achieve, right? From there, once you have that in place, then you break it down in terms of saying, where do I invest to get that number fast? Right? What is my opportunity cost in terms of investing in India versus investing in US versus investing in a China market, right? It's basically taking that conscious calls to get there. Now, if you were to, I know I'm going all over the place, but if I were to kind of structurally put down two broad points, how I would look at things is, one, how are you as an investor, conservative, aggressive, or in the moderate space, right? Because depending on that, you need to see how do you split your asset portfolio, how much of debt versus how much of equity. I'm extremely aggressive in terms of investment, so I go very skewed on equity, right? But if you are not so aggressive, then you need to dial down on how much your debt component is, right? So that you are able to stomach losses. That's point number one. Second is that I like the strategy, and this is something which I follow, is that when we look at building a nest egg for future, I look at breaking down into three parts or three buckets, as we call it. One, to say what is my short-term requirement, which is nothing but your emergency fund, etc. I look at it going up to 3 years, so that no matter what happens, next 3 years, I don't need to dip into the market, however the market behaves, so that I'm able to stomach enough and more volatility. Second bucket that I look at is that how can this second bucket, which is a little bit more on the, not the extremely long term, but a medium term perspective, where I'm able to invest in a combination of debt and equity, which can kind of refill my emergency bucket or my first bucket, which is for my day-to-day living, right? And the third is an fully long-term investment portfolio, which gives you all the alphas, right? Which can kind of fill this in. At this age in my life, I don't need bucket one. I need only bucket two and bucket three. But as I grow older, I feel then I start investing, getting bucket one, because now I need to see what happens.
Right? Yeah, correct.
Right now, bucket one would be like 6 to 12 months, right? That's good enough, because you also have another active life. Bucket one becomes extremely critical when you retire, when you say there's no other source of income. This investment is starting to give you the passive source of income, right? That's when bucket one becomes extremely critical. This is the way I see, investment and how to break things down. But I'm not sure that did answer how you go about. But from my perspective as an NRI Indian, doesn't matter. You go it from this perspective.
Yeah, I gave a nice structure, and it's nice to break it sort of down into buckets, and sort of then put a number to it or a percentage to it, and then decide on that. And it's given me some homework to sit and do with my husband. I think we've not got down to doing so. Definitely, thanks. So that
Yeah. But I think the moot point that you had also was, your question was also in terms of saying, having said this, what portfolio in India versus what portfolio outside, right? That is
correct,
also a
correct,
part of the question. Now,
correct.
that's very dependent on where do you see opportunity, right?
Yeah,
For me, I see currently opportunity outside of India, but for each, the way you look at things, right?
yeah,
From your perspective, see, US market versus India market, from a tax perspective, you're extremely neutral, right? As a Dubai resident, and you're a non-resident in US, so whenever you buy and sell, you're not paying taxes in
equity. Yeah,
US.
I'm not.
India perspective, as long as you're not touching equity or going equity in the sense, a direct stock, but you're going through mutual funds, you have an exemption through the treaty route. I hope you know about that.
Yes, I
And
just thought about that.
because of tax treaty, you don't need to pay taxes, right? Not
Yes, so
through
you
your
needed to
NRE,
just,
NRO
yeah,
account or whatever it is. It's purely,
yeah. I just
by
need the tax certificate from Dubai, which I
for
actually
that
did.
you need your TRC and
TRC, number of
correct,
days in Dubai. I just did all
correct.
that
If you
stuff.
do that, you don't need to pay taxes for mutual funds in Dubai.
Mutual funds. Yeah, correct.
Great. Perfect.
Yeah,
So
yeah,
so
that's
to that extent, you are indifferent, right? The only thing that breaks the call of saying should I invest in India versus US is, while the returns could be broadly the same. See, if you go back to history, right? Nifty gives you, now I'm looking at basics, right? I don't know at what level you
correct.
invest, etc. If I look at very
Correct.
basics, Nifty has given you roughly in the 12 13 to 15% CAGR, right, over the last 20 years or so. Having said that, if you look at Nasdaq, QQQ, or or S&P, if you look at it,
I
there
don't.
you're looking at anywhere in the again in the 15-17%. India also has given about 20%, depending on what point in time you have
Correct.
invested and so on and so forth. Net, I think you're broadly there. The US is much more mature market. India has a lot of potential because of the
Correct.
demography that we have and so on and so forth. But having said that, you always have that inherent advantage of 3 to 4% additional return because of dollar or rupee
Yes,
depreciation,
yes,
right?
yes,
So
yes.
that's something which kind of tips the thing to say, hey, it makes much better sense investing
Keep it
overseas.
outside. Yeah.
Having said that, it's not that in the last few years your Nasdaq has been doing extremely well thanks to the big sevens or big say
Yeah, yeah,
magnificent seven or eight or whatever you want to call it, which has given the maximum run for the money, right, because of AI, tech, and whatnot.
yeah, yes,
That being
yes.
said, India as such has been cold or sideways moving for the last 2 years, but it's a good time to invest in India as well now. But if you put more weights, I think right now I'm much more bullish from a US standpoint. At least that's my personal
Ye-
viewpoint.
Yeah, like
At
a
least for the
QQ.
next 1-2 years, I'll be very bullish from a
Yeah,
US perspective.
correct. Like a QQQ over an FCNR or a Indian
See,
index.
I have a different investing style for US versus India. For US, I go direct stock because QQQ again has it's an index, right? 100 stocks that you're looking at. Not all are
Correct.
performing,
Correct.
but if you're able to pick up the right stocks in US, I think you can much better return, and that's what is happening for the last 2-3 years for me, right?
Yeah.
Even a very good stocks like when things break, like Meta, when it fell, took the bottom, luckily I was able to pick it up. I did 4x on Meta. It's
Yeah.
a stock like Meta, it's very difficult to do,
Yeah.
right? So such opportunities do
But
come in
do
US
you see
with
that
a
as a problem?
large cap or a blue chip stock, which usually is not available in India, right?
So since you're sitting in India, you'll have a limit of
Absolutely.
$250,000.
Absolutely, yeah.
So do you think you'll move out after that point, or is the
Correct,
rule different?
correct,
Like once you sort of you cross the threshold, you can every year put 250, right? 250 is annual threshold, right?
correct. Every
Yeah.
annual calendar year, not calendar, sorry, financial year threshold. So
That's
literally I
a
can put
large amount.
500K
Yeah.
between March and April.
That's a large amount. Yeah, yeah. It should be okay for
Yeah,
most,
but
I
no,
think.
not like I'm investing that size, but I'm saying that's the limit that one could have,
That's
right?
an limit. Yeah,
But
yeah.
that being said, again, it's per family member. You have,
Yeah,
yeah.
exactly. It's
So
instructive.
it's not about how much you're able to invest. It's also about how you're able to get things done, right?
And do you have to pay
Uh,
tax on that in India as an
yeah,
Indian?
yeah.
So when you sell
So
it, you have.
this when from an India perspective, when you invest in US stocks, obviously US you don't pay any taxes, but India you do pay taxes, short term at 30% plus a chart says, and long term at 20%, right? 12.5%, whatever that is. Now beyond that, you also have TCS, right? When you send
Correct.
money
Yeah.
through LRS, you also
Yeah.
pay TCS beyond $10,000,
Correct.
right? So
Correct.
that's another cost that technically not a cost, is like your advance tax. And speaking of what it actually costs to move money across borders, this is where a lot of people lose more than they realize, not to tax, just to the exchange rate itself. It's the cost nobody factors in. That's where Aspora comes in. They give you a very transparent forex conversion rate, the same rate that you see it on Google, with one transparent fee. So if you're remitting to India, that's worth factoring in before you send. But bigger aspect that everybody misses out when you do US investment is the estate duty implication in US. Many people just forget it because beyond $60,000 investment in US, God forbid something happens to any of us and you hold more than $60,000, if the asset needs to be transferred to your spouse or kids, US will charge a 40% estate duty on those assets.
Wow.
Right?
Even if it's part of your will
Now
or something.
that's not in capital gains, right? It's inheritance tax. So that's something which needs to be planned for. If you want to do direct stock, then you don't have too many options unless you're outside of India. So I take that risk. I don't have an option. But for the others, there are multiple other ways of investing through Irish funds and so on and so forth. ETFs you can kind of participate to kind of come out of this.
Correct.
And that's something you can
point.
also explore, right?
No, it's a great
from a Dubai
point
perspective.
considering I am having kids and I have two kids, and I think that's a great point to note that, and I do invest a little bit in the US equity. So I actually didn't even realize about this inheritance sort of estate tax they'll have to pay. They're still young, they're 3 years old, but it's something important to keep in mind,
Yeah, no, anyone, right? Even from you to spouse also is it does impact every change of hand or change
It
of
impacts.
title from one person to the other. You end up paying this as long as the thresholds go beyond $60,000. And
So the
I'm
only way to
presuming
get
many watching this will have
Yeah,
that kind
sorry.
of investments.
Yeah, so the only way to sort of get out of it is sell the shares, right? And then give the funds to your children.
See, it's about planning, right? As in the how do I say? Depending on the asset value, the
Yeah.
best way to do this is to have a much more structured way, right? You could have a entity in between, like a blocker entity through which you invest, so that God forbid something happens to you, you're transferring the share of the entity which is not in US but outside of US, right? That's the best way to go about. In India, I can't do any of those things because it doesn't comply with FEMA perspective, right? But you being in Dubai, technically you can. So is the case with others who are outside, right? You can clearly plan it out in that fashion so that you don't have an US estate duty implication. Obviously, having an entity in another jurisdiction has its cost. So therefore, you need to weigh in saying what's the quantum of investment? Is it making sense to hold those asset in a separate vehicle? Because you're going to pay an annual maintenance cost, right? Forget it. If you even to have that in Dubai, you'll still need to maintain that.
It's
Sorry, you're
expensive.
saying.
Yeah, and it depends how old you are as well, right? Like at 30s, you're not thinking about it
It
as
can
much
get
as you
expensive
would be
depending on the
at
jurisdiction
60.
that you
Yeah,
choose.
exactly. So, I mean, if I was 60, I would definitely need
Just
to
to
plan for
give
that.
you ballpark numbers, right? Interesting point. When you're 60, you need to plan for it. That which would mean that you're trying to predict demise
I
for
mean,
yourself.
I
Right?
assume at 30,
So
I'll
if
have a
life is so
longer,
uncertain, then you don't need to do
span.
any of
I
these
know,
things.
a
Right?
good point. Yeah. I'm hoping I'll live a few years longer. But yeah.
So yeah, see, that's the hope for everyone, right? But that being said, these structures are not planning on what you wish, but planning on what you don't want to wish, right? Therefore, it's preparing for the worst, not for preparing for the best. So therefore, you need to kind of if you want to plan for it, and if the numbers make sense, you need to look at it from that perspective, right? From anybody who's looking at this, there are two things. If your investment is not crossing the 60K mark, it doesn't matter. If your investment are crossing the 60K mark but marginally there, but it doesn't make sense to have an entity, because ballpark numbers, you're not looking at anything less than $5,000 to $10,000 that you're going to pay for maintenance of these entities if you put in a jurisdiction like a Singapore or Virgin Islands and whatnot, right? Now, so if for you to get that expense, you need to see what your quantum of investment is to make broad sense there.
And that's an annual charge?
That's an annual charge. That's an annual charge for maintaining. Again, I'm giving you ballpark numbers. Each service provider could have a different cost to it. And then if I were to move, the other option for you is that don't go direct stock investment. You move through passive vehicles, right? Like I said, the Irish vehicles that you could potentially use, which invest in ETFs, but not directly in ETFs. You invest through the vehicle. So you are kind of having a blocker in that sense. So that's another way you can kind of get it done. Obviously, you don't have a choice of saying where you can invest. As long as you're investing in ETFs, then that works.
And so it applies to all ETFs, like a QQQ and stuff as well, is not getting taxed, sort of this inheritance estate.
It applies to you, sorry?
I said, does it apply to sort of a QQQ, like all ETFs?
Every asset, right? Any asset that you hold in US, on a demise of an individual who's holding it, if they're US citizens, they have a 14 million limit. If they're not a US citizen, they have a $16,000 limit, right? Now, beyond that, you get taxed. So you don't have an option. Now, at least for shares, etc., you could do on these lines. If you hold, real estate in the US, etc., and if you hold that from India, you don't have an option. You'll end up shelling out estate.
Interesting.
Obviously, again, there are structures to do this. I've helped many clients to figure it out, but it comes with a cost. Yeah.
Interesting.
I know your question was broad-based. I went all over. I hope gave you some.
No, it gave me a lot of
go.
food for thought. Yeah, a lot of thinking, a lot of food for thought, a lot of long conversations I need to sit and sit down and have with the family, and a lot of planning. So I've
No,
got
so
a lot of
intent
homework.
is also that, right? At least exploring, it's easy to just invest, but are you seeing the other impacts of those investments, right? That becomes extremely key for some, right? Yeah, that's broadly a quick summary of what we could look at from broad planning investments and whatnot from overall as an NRI, right? As in that's something which
Yeah.
I would say is a one way to kind of go about. Obviously, there's no one size fits all. Each one needs to look at their objectives and can kind of take a plan around it. And
Yeah.
definitely something that I always advise. Not like this business for me because I don't do financial advisory. If you're not very good at investments or able to track, see, there's a conversation I was having with another gentleman. It's easy to buy, but easy to sell, very difficult to sell, right? You don't
Mm-hmm.
know when to exit and come out and book profits because
Correct.
profit
Just
on
like the
paper
art
is
market.
always great.
Yeah.
Absolutely, right? So
Yeah.
you need to know when to sell, right? And if you don't know those judgments, obviously everybody is not savvy to kind of understand charts, what is the resistance, what's the support, etc., to kind of take a call. Or you can obviously understand broad macros, but in a way, if you're not tracking regularly, better to even have a professional to advise you, right? Always
Mm-hmm.
I get this pushback from people saying buy professional, right? Obviously you need to choose the right people, but end of the day, no harm in paying a small percentage of the growth to that person, as long as if you're at, say, if you're able to make 10, 12% or 10% return, and if that person
Mm-hmm.
is able to give you additional 2, 3%, your cost is taken care of, you're better off, right? Obviously choice of right person is important. Obviously how do you go about doing that is also extremely critical.
Mm-hmm. Very true.
Any other questions, Niharika? Happy to pick it up. I believe you did wanted to touch upon FCNR as well.
Yeah. Yeah. If you could, tell me a little bit about it, what your opinion is. If you think it's sort of a global diversification or it's coming back to India, what do you think?
Technically there's no diversification here, right? You're essentially giving a loan in a way to Indian banks as a deposit, right? So therefore, it helps from an India story and India, foreign currency deficit standpoint. That being said, for the while this was done in the past, also now essentially what you're getting as a benefit is that you are able to protect yourself from rupee depreciation, right?
Mm-hmm.
Earlier also the returns were the same, but because of factoring for rupee depreciation, etc., you never got the right return. Now they're saying
Correct.
let's take in that cost. Government is
Yeah.
willing to take in that cost of saying, okay, I will subsume the rupee depreciation cost for banks, so therefore why don't you give better returns to the NRIs, right? So therefore it's
Yeah.
a good platform. Now the icing on the cake there is that you can also leverage and make
Yeah.
better returns than the 6.5% banks
Correct.
are promising. But the key there is, again, I've made that a video on this as well in terms of
Yeah.
what are the
The
points to look
spread.
at. But in a
Yeah.
nutshell, what you need to look at is that you're able to, yeah, you're able to leverage, but there's a cost to that leverage, right?
Cost important.
Very
Yeah.
clearly understand the fine prints of the documents that you're going to sign, etc., to see finally what's your overall cost. As
Correct.
long as your overall cost after everything else, including there could be transaction cost when you send money, receive money, take everything in, and after that if you have a surplus, then the investment makes sense. Otherwise, without leverage, also you have a good return that is coming in, right? If you're getting even 6.5% plus 4%, you're getting a good 10.5% return. If you look at from an India INR terms, you're making that return, which is good, and it is tax free, right? Tax free in India, tax free in Dubai anyway for you, so it makes a lot of sense from that standpoint. Now
Yeah.
beyond that, if you're able to leverage and if you're getting good cost, then if you're getting that good spread, right? Spread is nothing but the 6.5% that you will receive from Indian banks minus your cost. If it's even 1%, it's a great way to leverage and take it up. So in a nutshell, you can just conclude, right? Where I was is that, yeah, so basically if the spread between the investment or the deposit that you make versus the overall cost, right? Every cost that is you need to factor in. With that, if there is still a positive number, any spread, small spread that is there, in my mind, anywhere more than 1% is a good way to kind of explore that number, right? And
Correct.
therefore that leverage will make sense. Otherwise, you're better off just invest as is and not go into the overall leverage chucker, if I were to call it, right?
Correct.
Yeah,
Correct.
yeah.
And what
Any other
about
question,
gold?
Niharika? Happy to kind of pick it
Go-
up,
Yeah.
or we
What
can
about?
go and move into the next section. That
Yeah. What's your opinion on gold? I mean, we've seen
gold,
it.
gold. See, given a very good run up in the last couple of years, right? Now, see again, if you ask me, it also did have a good correction as well, right? It's at a place where it is a good place to buy. Now, if you're buying with the intent that it's going to give that parabolic move again, I think that may not be the
purpose for you to invest in gold, right? In my mind, we look at gold. You look at gold as having something, where you're able to invest, say, 7 to 10% of your portfolio, right? It really works well from that standpoint.
Okay.
So, if no other questions, then we can quickly go into our rapid fire,
Yeah.
which basically I want your viewpoint so that we get your perspective on how you think about investments, money, NRI, life, and whatnot, right?
Yeah.
Perfect, Niharika. Let's get into the rapid fire round, right? Let's
Yeah.
start with the first question. One money mistake you would undo if you could.
I would have started buying Indian art way earlier when I was working. I wish I think I wish I knew that I would have a lot more money. I think when I was working, I was a student and I didn't know that I could ask my dad for money and buy art, which would have made him money. So I wish I bought
Got it.
Indian art
Especially when
earlier.
you're entrenched into the whole system.
Yeah, yeah.
Yeah. One thing you think every NRI is getting wrong right now.
I think keeping cash idle because they think it's sort of safe, so they don't. They get scared to send it to India, and then they get very low sort of FD returns in Dubai or wherever they are internationally. So I think
Got it.
keeping it idle, yeah.
Got it. And what about AI? Is it a bubble or a real thing? And have you made some investments in AI?
No, so it's definitely real. I think we're very early. I mean, I use it every day. I'm sure a lot everyone uses it for like ChatGPT helps me plan my kids' meals. It helps people think, it helps us research. It's just making life a lot more efficient. It's definitely real. It's definitely early. Yes, I did buy Nvidia when my son was born 5 years ago. So I got very lucky with that. A small amount. Wish I got more.
Sure.
Always wish when you look back.
Yeah.
And then I do
Hindsight.
in yeah, and then I do invest in sort of the infrastructure around AI sort of
The
data.
shovel game rather than the
Yeah,
gold game. Got it. Art, do you own one? If so, is it an investment or love?
no, definitely love. I own a lot of art over the last couple of years, and I think there has to be love at first sight because art is something you live with, right? You see it every day; it's
Sure.
on your wall.
Sure.
But I do know the whole pricing investment angle around it, so I do keep that in mind when I'm making decisions for something above $10,000 sort of mark.
Got it. I've not invested in any art, but yeah, I don't know how to price it also. For me, everything looks the same. For
Call
instance,
me.
these pictures.
Free for
Yeah,
friends and
this.
family.
So an asset class you think most which is most underrated that somebody has bought.
Art.
Okay.
Yeah, yeah. Like so, I think traditionally everyone bought gold, right, in India, and you were sort of given gold as gifts in India.
So and investment you think it's most overrated that somebody has bought.
I think, like definitely right now, fixed deposits, FCNR. Everyone's doing it because everyone is doing it. Every NRI wants to do FCNR. Like I'm just like, yeah, that's why I loved your video on understanding sort of how much you're actually
Got it.
taking.
Fair point. An asset class you don't understand but want to.
Private equity, I think, sort of investing in companies that sort of give you multiple
In unlisted
returns.
space.
Yeah, yeah, love to
Got it.
learn a lot more on it.
Got it. Gold a relic or still relevant?
I think
We spoke
100%
about it.
relevant. Yeah, yeah. I think should be part of everyone's diversified portfolio.
Great.
And yeah,
And last question, Dubai or India, where do you want to live? Or where do you want to retire? Rather?
tough one. I think ask me in 20 years, but I'd say Dubai is
Today,
home.
what does your mind say today?
I think today Dubai will be my base. It's like where I'm raising my family. So
Got
definitely
it.
Dubai.
You don't retire there.
Seems like it. Yeah.
Got it. Perfect. That's all I had. Thank you so much for being part of this conversation. Loved it every bit, especially the career path that you've chosen. Very different, not common
Yeah.
to have these conversation. Loved the entire conversation, and I hope you had some fun as well.
No, I did. Thank you, Nikhil.